Aircrafts for Nigerian Air arrive Abuja this Friday. Federal government set to unveil them. Nigerian Upstream Petroleum Regulatory Commission issues 7 new regulations for the oil and gas industry. World Bank projects 11% energy price decline in 2023. Plus, as the world celebrates children, the Central Bank of Nigeria has more for us at this point. This is Business Express on the network service of the NT, and we are reaching you from Abuja, the nation's capital. I am Benny Adams, your guide. Good to have you join us at this time. It's that time we talk business and bring you up to date with all the happenings around the world. And we start by telling you that the African Development Bank says Nigeria and other economies of Africa are projected to grow by 4.1% in 2023 and by 4.3% in 2024. President of the AFDB, Akinwumi Adesina, said this while inaugurating the African Economic Outlook 2023 at the ongoing 2023 AFDB annual meetings in Sharm el-Sheikh in Egypt. He said the economies on the continent have shown a remarkable resilience in spite of the multiple and dynamic shocks it faced. The AFDB boss attributed the slow growth on the continent to the tightening global financial conditions and supply chain disruptions exacerbated by Russia's invasion of Ukraine, which subdued global growth. He also said growth was also impaired by the residual effects of the COVID-19 pandemic and the growing impact of climate change and extreme weather event. Minister of Finance, Budget and National Planning Zainab Ahmed has assured the governing board of the Nigerian Deposit Insurance Corporation Commission of the ministry's support in the discharge of its roles and responsibilities. She gave the assurance while inaugurating the board on behalf of the federal government and tasked the chairman to ensure that delineation of roles between the board and committee is clear and there are no mix-ups or conflicts arising there.
You are assuming duty at a time when the Nigerian financial system is still facing some challenges that require efforts aimed at addressing issues such as corporate governance, high level of non-performing loans, and slide in revenue generation. The potential benefits and risks associated with the financial technology, the fintech and blockchain technology are also on the front burner. This and other challenges can cause threats to the stability of our financial system and must be addressed promptly for the sector to play its role.
One of the most disturbing things is when people don't know their roles and when they want to overreach, because we have so much to do that we do not need to do anybody's job. We assure you that we understand the mandate of this commission, of this corporation, which is deposit guarantee, bank supervision, distress resolution, as well as bank liquidation.
The corporation is the only agency responsible for administering the deposit insurance scheme in Nigeria and provides financial guarantee to depositors of all deposit-taking financial institutions, thereby promoting public confidence in the banking system. And Nigeria's gross domestic product, talking about the GDP growth, slowed by 2.31% in the first quarter of 2023 on a year-on-year basis. The National Bureau of Statistics, NBS, in Gross Domestic Product Report Quarter 1 2023, released on Thursday, said the growth represents a decline from 3.52% in the preceding quarter and 3.11% recorded in the first quarter of 2022. It noted that the agriculture sector grew by minus 0.90%, lower than growth of 3.16% recorded in the first quarter of 2022. The NBS added that although the growth of the industry sector improved to 0.31% relative to minus 6.81% recorded in the first quarter of 2022, agriculture and industry sectors contributed less to the aggregate GDP in the quarter under review compared to the first quarter of 2022. And the first quarter 2023 GDP is our focus on the program today. Our guest is an economist, Dr. Chijoke Ikechukwu, who joins us virtually. It's good to have you join us on Business Express at this time. It's been a while, Doctor.
Yeah, thank you very much, Benny. It's my pleasure.
Thank you. Well, like you heard from that background, GDP at a negative 2.3% to begin the year. What does that mean for the economy, particularly at this point in time?
We expected that this level of growth, or probably negative growth, will exist, considering some of the things that have happened in this particular quarter, the quarter under review, which is the first quarter. Recall that Nigerians woke up to see that it was difficult to access cash and to make payments and to do transactions. We also realized that it was difficult again to access foreign currency. And so within this period, a lot of things have happened that could have led to this kind of negative growth. But we expect that having settled, we should be able to do better in the particular quarter we find ourselves, which actually started in April. So I know the expectations were right that we are going to have this kind of negative growth, but there is still light on the other side, considering the growth we have seen in this particular quarter.
Okay, availability of cash, talking about the period we experienced, the new Naira notes unavailability, which led to the cash crunch. Yes, you attributed that as part of it. We're talking about access to foreign currency. Has that changed? If you ask people who are in industry, people who are in the real sector, they'll tell you access to this foreign currency is still an issue, particularly at the official exchange rate. So are you saying, even as we expect in the next quarter, the GDP figure, are we still going to be experiencing this?
Yes, we expect. We are only hopeful that with the launch of Dangote refinery, where all the monies we were spending in importing petroleum products will actually be deployed to some other things, and the depletion we've always had of our foreign reserve will reduce just because of that refinery. Even though that refinery is going to come towards the beginning of third quarter, but we're going to be seeing that a lot of traction is going to happen within the economy that will indeed provide more foreign currency. It is actually a situation of demand and supply. People who need this foreign currency far outweigh the people who the things that are supplying the foreign currency. The oil revenue, of course, has increased because we have increased the capacity we've been producing. We used to produce less than 1 million barrels per day. Today, we have that production has increased to about 1.5 million barrels per day. So this is an improvement. And so the more we have that increase in the revenue from oil, the more we can actually take care of the foreign currency requests. So we're expecting that this and the refinery that's going to come will help us generate more foreign currency in revenue, and that will help us tremendously.
Okay, Doctor, a little bit away from the oil revenue. Let's talk about the non-oil revenue and what it should bring to the table in terms of foreign currency. We understand that the CBN has tried to encourage non-oil exports with the RT200 initiative. How do you assess that, and how far is that going in improving our foreign exchange stand?
Yeah, we all know that non-oil exports have actually contributed, non-oil sector contributed far more of the GDP than the oil sector. We have noticed that oil sector is not contributing. In fact, for the first quarter, contributed only 6.21% to the GDP, while the non-oil and agriculture has been contributing far more. So, having said this, all we need to do as a country is to ensure that the non-oil sector contributes to the revenue base, whereas the oil sector is still contributing to the revenue base. In fact, dominating the revenue base of our country. The non-oil sector, even with higher contribution to GDP, is still not getting enough revenue for us to be able to say, yes, we are really doing well with revenue from non-oil sector. So that's what we need to start doing to generate more revenue from non-oil sector. Although it is contributing more to the GDP, the revenue arising therefrom cannot be seen actually to give competition to the oil sector revenue base. So that is actually what we have to work on to ensure that we have that parity.
Okay, still on the GDP figures, what is this thing that we continue to do wrong that we keep recording this negative growth? What's that thing we need to do differently?
Yeah, first of all, we need to create a very good enabling environment, as we have always said. I expect that with the incoming government, new government coming in right now, there will be more confidence coming into the system, because usually when there's transition, people appear to relax a little in business proposals in the country. Foreign direct investments will still wait to watch to see the transition, the way it will go. Once this transition goes well, we're expecting that more foreign direct investments are going to come in. Portfolio investments are also going to increase, and so we expect that will actually grow the GDP in that regard. We expect that certain things are going to reduce the insecurity that have actually affected the production output coming from the agricultural sector and many other sectors. We expect that will also be addressed. From what we are saying, we are expecting that if people have more access to funds, they are going to do more business, and all these ripple effects will actually grow the GDP to the extent that we could see. So I expect that from the second quarter to the third quarter, we're expecting some areas of growth once there is stability in government and all that.
Okay, talking about your expectations from the incoming administration, you mentioned a possible improvement in foreign direct investment, as well as a security situation, which actually promotes promotion and all of that. You also mentioned access to finance. Talking about access to finance, just about yesterday, the MPC increased the interest rate to like 18.5%. Well, we have a lot of reasons being given for that. How does that go side by side with your expectations of more money into the real sector for the economy?
Yeah, more money can come in various forms. I know that the MPR having been increased will reduce access to loans that are expected to come.
Yeah.
Because the more you increase, the more you increase the MPR, the less the propensity of people to borrow from the deposit money banks. But we also expect that if everything is constant, people will only have to battle with the increase in interest rates and battle with the stability of the economy and things like that. We expect that banks are going to be more comfortable giving out monies to certain sectors. It may not go in the same volume that they used to do, but let more and more people have access to these funds. The more people have access to funds, the more they can utilize them into their businesses, and the more the economy will continue to grow. So as far as people can have access to funds, the interest rate may be high, but once they have access to funds, and once the funds are available, obviously that will impact positively the economy. And these are the expectations we have. We also expect that exchange rate, like I said before, if it is reduced, access to funds will just be there, and that will go a long way in providing a lot in the economy.
That's quite a good one. It is a motivation at this time. It is such optimism that we need moving forward, particularly that we're expecting a new administration in a few days. Thank you so very much, Dr. Chijoke Ikechukwu, for sharing your thoughts with us at this particular point in time. We'd love to have you again and again and again.
Thank you very much, Benny. Thank you.
Thank you. Moving on, the Central Bank of Nigeria, in commemoration of the 2023 Children's Day, is providing school children and orphans within the city with financial literacy in order to make them responsible financially, successful adults in the future. Bosirable reports that this is in line with the global theme, investing in our future means investing in our children.
So that they will be well informed about what is happening in the society. And as they keep on growing up, they will also know how they can manage their finances.
We call it social engagement, CSR social engagement, with children, the less privileged children. So we bring them in their numbers to sit under one canopy and just enjoy and have fun.
And we, the home operators, and we benefit. They support us massively.
This program is uniting Nigerians. We pray that they'll be able to sustain it beyond.
The leadership of the Ministry of Industry, Trade and Investment is of the view that for efficient resource utilization and improved service delivery, government must continue to properly equip the workforce and address capacity gaps by conducting specialized training. This was at an event to honor staff who have done well in the course of the year with a ministerial award.
In this regard, we are to always balance productivity, proper utilization of resources and services delivery to ensure sustained national growth and development.
The Nigerian Upstream Petroleum Regulatory Commission has finalized 7 priority regulations out of the 13 presented for gazetting. The Commission's Chief Executive, Gbenga Komolafe, says the 7 signed into law shows a revolutionary departure from the trajectory in the upstream sector since oil was discovered in the country. Lydia Sampson has the details.
The Nigerian Upstream Petroleum Regulatory Commission is determined to be the 21st century formidable regulator in Nigeria in their efforts towards introducing clarity in the industry through transparency in hydrocarbon accounting. The Commission had continued, in collaboration with industry players, formulated regulations in line with the PIA.
Setting of these regulations demonstrated the Commission's commitment towards providing a business-enabling environment in the Nigerian upstream oil and gas industry space.
Little wonder, Dr. Oji Ogbonnaya Oji, Executive Secretary, Nigerian Extractive Industries Transparency Initiative, NEITI, described the Commission as an emerging agency of courage, pushing boundaries to make positive impact in the Nigerian upstream oil and gas sector.
NEITI has found in NUPRC an emerging agency of courage that is ready and willing to collaborate to push the boundaries of transparency and accountability in the industry.
The 7 finalized regulations are Nigerian Upstream Petroleum Measurement Regulations 2023, Nigerian Upstream Decommissioning and Abandonment Regulation 2023, among others. In Abuja, Lydia Sampson.
Thank you, Lydia. After 4 years of overseeing the Ministry of Budget and National Planning, Clem Agba is convinced that integrated rural development is key to solving urban area problems. The minister stated this while highlighting the achievements of the ministry at an end-of-tenure press briefing in his office. Neka Oko reports.
It was a moment of reflection and gratitude for the minister, a chance to look back at his time in office. It was not an easy ride, as the last 4 years had the global economy got brought down to its knees by the COVID-19 pandemic, volatile oil markets, the war between Russia and Ukraine, and most recently, the crisis in Sudan. The task of planning for about 200 million people, most of whom are under the age of 35, lies with the Ministry of Budget and National Planning.
Our youths who live the rural areas for the urban areas are in search of opportunities. So if those opportunities are provided for in the rural areas, then we are not going to have this huge rural-urban migration.
Notable achievements of the ministry include the development of the Medium-Term National Development Plan, successful implementation of the Economic Recovery and Growth Plan, and launch of the revised National Integrated Infrastructure Master Plan, amongst others.
When the government came in, the infrastructure stock was about 20% of GDP. And as at last year, when we completed this and launched it, it has grown to about 40%.
The minister assured the ministry would continue its efforts to improve the country's economic growth and development in the coming years. In Abuja, Neka Oko.
Oil prices were stable on Friday as the market weighed conflicting messages on supply from Russia and Saudi Arabia ahead of the next OPEC Plus policy meeting, a stronger US dollar, and worries of weaker than expected demand growth. Brent crude was up 40 cents at $76.66 a barrel, while the US West Texas Intermediate rose 54 cents to $72.37 a barrel. Benchmarks settled more than $2 per barrel lower on Thursday after Russia Deputy Prime Minister Alexander Novak played down the prospect of further OPEC Plus production cuts at its meeting in Vienna on June 4. Both prices were still poised to post a second week of gains of slightly less than 1%. Let's now see the prices of other commodities on the global market. Nigerian equities rallied to overturn Thursday's losses to finish the week on a positive note. At the end of today's trading session, the old share index advanced to 52,973.88 basis points. A volume of trade closed at 461 million shares, valued at 7.667 billion naira in 6,520 deals. Equity capitalization ended the week at 28.8 trillion naira. The banking sector dominated activities to see UBA, Access Holdings, and Zenith Bank emerge the most sought after stocks. We now see figures on the global scene as anxiety is increasing in parts of Wall Street. Nekaoko has more on that.
European stock markets were higher Friday as talks to raise the US debt ceiling reached their crucial final week. The French CAC added 0.18%, UK's FTSE advanced 0.15%, while Germany's DAX rose marginally. Asia-Pacific markets on their part were mixed after Wall Street saw a technology rally. In Japan, the Nikkei 225 rose 0.37% to end the day at 30,916 after surpassing the 31,000 mark earlier in the day. Mainland Chinese markets were all higher, with the Shanghai Composite ending 3 straight days of losses to close 0.35% higher, while Hong Kong's Hang Seng Index is closed for a holiday. U.S. stock futures rose slightly Friday as investors kept an eye on Washington for signs of progress on debt ceiling negotiations. The Dow Jones Industrial Average futures rose 42 points, S&P 500 futures advanced 0.17%, and Nasdaq 100 futures climbed 0.3%. It was mixed trading for African stocks this Friday. South Africa's benchmark index dipped 0.47%. The tune index in Tunisia gained 0.13%, while Namibia's overall index and Ghana's GSE composite were marginally positive.
That wraps Business Express for the week. Remember to send in your comments, observations, and suggestions. Also be informed that all previous episodes are available on YouTube on the NTA's channel. Business Express returns next week. Have a happy weekend.